Marvell Technology is a fabless semiconductor company that creates products used in data centers, enterprise servers, the Internet of Things, smartphones, and storage systems. The company went public in 2000, and until 2018, the return to shareholders, excluding dividends, was only 10%. That's significantly worse than the S&P 500. Since 2019, however, the stock has taken off, gaining 300%, and that's because Marvell is directly benefiting from the boom in data centers and artificial intelligence. This can be seen in top-line revenue, which grew 50% in 2021 and another 33% last year. At the current share price, Marvell has a market cap of $52 billion. It's got $1 billion in cash and $3.2 billion of debt, so the enterprise value is around $54 billion. Revenue over the last 12 months is $5.8 billion with $1 billion in free cash flow, but net income is negative at minus $167 million. That means Marvell stock is valued just over 9 times revenue and 54 times free cash flow. Meanwhile, the company pays a dividend of 0.41% and has gross margins just over 48%. If we look at the company's revenue mix, you can see that Marvell derives 38% of revenue from data centers, 25% from enterprise networking, 19% from carriers, 11% from consumer products, and 7% from automotive and industrial. There's no doubt there are some fast-growing markets in there, and Marvell has benefited from the recent boom in AI stocks. However, Marvell's exposure to AI isn't as large as you might think, at least not yet. The company estimates its AI revenue to be only $200 million in 2023, which is less than 4% of total revenue. And although the company thinks that it will grow to $800 million by 2025, there are no shortage of semiconductor companies that will be competing for that same business. Meanwhile, Marvell's growth in AI may be balanced out by a slowdown in Marvell's wired communications products. Wired networking products are showing signs of terminal decline, and those products make up a large part of Marvell's revenue. As well, the move into GPU-based servers for AI could hurt demand for Marvell's CPU connectivity ports. As noted by Herb Greenberg on Twitter, Marvell barely mentioned AI in its conference calls until the first quarter of 2023. Now it's trying to cash in on the boom. Overall, there are no shortage of competitors in this space, and the semiconductor industry will remain a tough environment driven by cycles. The AI boom is huge, but I think there are better positioned companies than Marvell Technology. That's why I give the stock a neutral rating, but these are my personal opinions, not financial advice, and I've got no position in the stock.